Hello everyone, welcome to JAIIB CAIIB English Medium. My name is Aarti and I hope you all are doing good. So as you know, this is our Manthan series specially designed for our December 25 CIB exam. So if you are visiting to this particular channel for the first time, do subscribe it and share this session with your friends and colleagues so that they can get the benefit from this particular series, and if they are planning to give this attempt and they want to clear in this first attempt. So make sure you're watching all the sessions because we are discussing important concepts. Along with that, we are solving it. Yes. So make sure you are watching these sessions till the end. Even you can utilize the sessions for your revision. So let's start today's session, which is your Manthan series. And today we are going to talk about Unit 13. Under this unit, we have some important topics. First, we are going to deal with those sub-units or subtopics, you can say. So let's start this series. So first is your corporate valuation. The name of this unit, corporate valuation. Now valuation means what? When you are calculating, yes, what is the total value of any company, correct? Valuation means when you talk about the total amount. So this is valuation. Correct? When you are calculating it in some absolute figures, that is your valuation. Now, corporate means what? Corporate means your company. Yes? When we are talking about company. So, corporate valuation means what? When you are talking about the value of that company. Like if I want to know what is the value of, for example, here if I'm asking what is the value of this Reliance industry, yes, or what is the value of this Tata Group, and you are saying, ma'am, Tata Group value is suppose 2600 crore, or you are saying Reliance value is suppose 3500 crore. So that is the value we are talking about. Correct. We are talking about value like what is the value of my mobile phone, and I'm saying that is just for 10,000. That is the value of my mobile phone. The same thing we are talking about as a company. Yes. What is the value of this company? Yes, what is the value of company? That is your corporate valuation. So corporate valuation in a crux, you can say when you are valuing any company. So now let's read the definition also. It is a process of determining the value of a company entity, and it is a most commonly used in the context of financial industry. When I want to know the value of the companies like Tata, yes, Reliance, the big topmost companies, then I will use this term, corporate valuation. Now, next thing you are going to see, that is about the calculation part. Yes, though I said that what is the value of the company, you immediately told me that 35 crore, yes, 3500 crore or whatever it is. But how you have calculated it? On what basis you are saying that this is the value of the company? So, generally for valuation, we call analyst. Now, analysts, they are going to do what? They are going to do the business valuation process to find out the present value of business or future value of business. At present, if I want to purchase Reliance Industry, what is the amount I require to pay? Or if I want to purchase Reliance Industry after 5 years, what value I can see in future? So that is the valuation I'm going to do with the help of corporate valuation. Here we are valuing it, whether at a present time or whether in your future time. Now when we talk about the present value, means here we are going to use some discounting thing. I hope you can recall this term, discounting, or you can recall this term, that is time value of money. I hope you can recall any of this term. Yes. So in your JIB, we used to calculate with the help of discounting rate, the time value of money, that whatever amount we are receiving today, that is more valuable that you are going to receive tomorrow. Okay. So based on these factors, these things, we value your business. So this is the definition and this is the example also we have taken. Now while we are passing any, accounting entries, or when we are talking about balance sheet, yes, when we talk about balance sheet or when we talk about your profit and loss account, we know we require to use some rules. Yes, we need to use some rules, and that those set of rules, we are calling it as accounting standard. See, if you're studying for CIB, I hope you have studied for JIB also, because one of the criteria to go for CIB is clearing your JIB. So in your JIB, under your AFM, already we have completed these things. Yes. For preparing your books, for preparing your finances, we require some set of rules which are given under your accounting standards, or you can say under your Ind AS. Yes or no? So all the set of rules and standards are already given in your accounting standard and in your Ind AS for preparation of your financial books. That is a balance sheet, P&L, how to pass the journal entry, yes, which account to be used. Everything we can see in this accounts. The same concept, the same set of rules we are going to apply in your valuation of companies. See, for your corporate valuation, we also require the rules. Like we are using in accounting, this accounting standards and Ind AS, the same thing. While preparing the valuation of any company, we require some set of rules. We require some set of rules. Now, how will you get the set of rules? Through this international valuation standard. Like in accounting, we have IFRS, US GAAP. Yes, the same thing in your corporate valuation, we want some set of rules. And who is giving this set of rules? International Asset Valuation Standard Committee. They are providing, they are responsible, or they are developing the International Valuation Standards, IVS. Who develops this particular standard for corporate valuation? International Asset Valuation Standard. Now, what they are developing? They are developing international valuation standards. Now, along with this, what they are following? They are maintaining consistency, transparency, and confidentiality in the valuations. Yes, the confidence they are maintaining in the valuation means if you want to value any, foreign companies like Tesla company, that Apple company, you can value it while sitting in India also, because you are going to follow this set of rules. So any company, if you want to value, yes, apart from Indian companies, you can value it, and everyone will accept whether that person is from UK, from US, because you are following some international practices of valuation. And whenever you are following international practices, that is going to be accepted by worldwide. That is the advantage. But if you're following some Indian rules and laws, that is only going to be accepted in India. And like Banking Regulation Act, that is specifically designed for Indian banks, correct? But if you want to follow the same rule in World Bank, can you do so? The answer is no, because that is specifically designed for Indian banks. The same thing here we are applying, that when we are following set of rules which are accepted by worldwide. Yes, so that is given by this IVS, International Valuation Standards. Now, according to the provisions of IVS 105, valuation approaches and methods, due consideration must be given to the valuation approaches that are pertinent and appropriate. So this is the meaning and definition of your IVS 105. Now, coming to the important types of value. What are the important types of value we have? There are two types, basically the book value, and second one is your market value. So let's start with the first one, that is your book value. First one is your book value. Now, book value means what? See, book value is an valuation through an asset or the complete business of an entity published by the books or the financials of the company. Yes, how you are valuing the company? By checking the book. And which book companies are maintaining? That balance sheet. Which book they are maintaining? That balance sheet. Yes, so from balance sheet when you are valuing the company, that is what book value you are using. See, in your banks, when you want to sanction any loan, and before sanctioning it, when you are actually doing the cross-checking of those loans or documents, you are also analyzing what is the maximum amount what is the maximum amount you can issue. And how you are deciding the maximum amount? By checking documents. Yes, as per the documents, you are going to issue the maximum amount. What is the maximum loan you can sanction it? So how you are doing this? With the help of some documents, some books. The same thing when you want to value any company and you are using some balance sheet or some books. So through which method you are doing the valuation? Through the book value. Through which particular thing you are doing the valuation? Through the book value. You can remember this book value, book, your balance sheet. Book, balance sheet. Yes. Now coming to the next one, that is market value. Now market value means in market, if you want to purchase and sell, what is the amount you will be receiving? That is what market value. Suppose today I want to purchase one iPhone. Hana? Today I want to purchase, suppose iPhone, and the value of this iPhone is rupees 1,50,000. So this 1,50,000 is going to be market value. Now, market value is the term used to describe how much an asset or company is worth on the financial market according to the market participants. Basically, you can say we are using demand and supply rule here. Now, as a customer, how much I'm ready to pay. As a seller, how much they are ready to sell it, that particular thing. So that is what market value. Now, market value sorry. So market value is fundamentally an equity value because equity investors value companies' share apart from debt lenders and other investors. Now, who is actually using this market value? Your equity. Equity part. Equity means they are sharing the ownership. So that is what market value. And this market value is not used by debt lenders, means like loan givers and from whom you are taking a borrowing, and other investors. So this is about the market value. Last thing under this is your enterprise value. One more topic we have, that is enterprise value. Enterprise value means it refers to the value that is placed on a complete company, including its debt and other commitments. So here when you are talking about the value of this company, like if I am talking about the value of Reliance company, so when I am using equity also and debt also, means whatever equity as a owner, yes, plus borrowings. When I'm adding the both things, I'm going to say this is your enterprise value. This is not the complete formula. This is not your complete formula. I'm just giving you one quick, summary how you can remember it when you are valuing total company's, worth. Then that time you are going to use enterprise value. So here, when you're talking about this balance sheet, in your balance sheet, you have two sides. First is your asset side. Next is your liabilities plus capital. So when you're talking about this side, this side is always equal to your this asset side. Correct? So this is the balance sheet equation is. Now when you're talking about this liabilities and capital, that is your enterprise value. So you can add all your total assets also. This will also give the same thing. Or you add total liabilities plus capital. This will again give you enterprise value only. So liabilities and shareholders, like net debt and equity value, this will give what? This will give enterprise value. So what formula you can make here? Enterprise value equal to equity plus debt. Again, I am saying this is not the complete formula. This is not the complete formula. Okay, I will tell you what complete formula is, but this is not the complete formula. Just now remember one thing, enterprise value is nothing but the addition of your equities plus debt. Not a complete formula, but remember this. Then, what are the approaches to corporate valuation? How you can value any company? There are three approaches. Market approach, income approach, cost approach. Market approach, income approach, and cost approach. So let's start with the first approach, that is market approach. Now, under this approach, when you are doing the valuation of any company, how you are determining the value of a company, an intangible asset, and ownership stake in a firm. of or a securities by taking into account the price of recent transactions or the price of assets that are comparable to the one being valued. Yes, market approach means what? When you are identifying the recent transaction, when you are looking for the recent transaction or the price of assets that are comparable to the one being valued. Which is your recent transaction? As per that, when you are valuing it, that is market approach. As per the recent transaction. Yes, suppose if I want to purchase one land. Okay. Now I don't know what price I am going to pay for this land. So what I can do, I can see some recent transactions nearby that area. Yes, and nearby that area, suppose one land, just add in one transaction through that land. Suppose there they sold 1 acre for rupees 10 lakhs. Yes, this is the recent transaction in nearby that land which I want to purchase. Now based on this transaction, I can value my own land which I am focusing on to purchase. So suppose this land is 2 acre. So how I will do the valuation? I will just multiply 2 into 10 lakhs because 1 acre is for 10 lakhs. So 2 acre is going to be 20 lakhs. Yes, if I am valuing like this, then that is your market approach. You are using recent market, transaction. So this is your first one, that is market approach. Then next is your income approach. Income approach means here, what is the company's expected future earning? Based on company's expected future earning, or you can say the cash flow, you are calculating company's valuation. If I start today when car manufacturing, what are the incomes I can earn in my future? Okay, every year, what are the cash flows I am going to generate? Based on that income, based on that future earning, I am going to calculate my company's worth. How I am calculating through this income approach? By calculating the income approach, that future earnings. That is what income approach is. Then last one is your asset approach. Asset approach is also known as asset based approach. Okay, assets less liabilities. Now here we are taking your book values. Now book value means here you are going to determine the worth of the firm on the basis of value of the assets held by the business based on the assets which are actually held by the company, and after deducting liabilities, whatever the amount you are receiving, that is your cost approach. Cost approach means assets minus liabilities, whatever amount you are receiving, that is your cost approach. So these are the three approaches through which you can value any corporate: market, income, cost. Okay, now let's solve questions based on this concept because these are very important. First one, what does the term book value refer to in accounting? The total market value of an asset, be the value of an asset or business entity as recorded in the financial books, expected future value of an asset, a price at which an asset is sold. Correct answer is your answer B. Yes, correct answer is your answer B. When you are valuing your, companies through their assets, through their records, yes, like from their balance sheet especially. Financial books means here you are valuing through balance sheet. So correct answer is your answer B. Now, how is enterprise value is calculated? Okay. Now here your total revenue minus expenses, no. Net profit plus shareholders equity, no. Assets minus liabilities, no. See how you are going to calculate your EV. Earlier I told you need to add your equity part plus your debt part. Now from this debt part we need to subtract cash part also. Then only you are going to calculate the true enterprise value. So correct answer is your answer A. Always you need to subtract cash and cash equivalents. Okay, then only you can calculate your enterprise value. So correct answer here is your answer A. Then if a company's enterprise value is 500 crores and its net debt is 300 crores, what is its equity value? See, enterprise value equal to your market equity plus debt minus cash. Okay, so we are saying no cash is there, debt is equal to your 300, enterprise value is 500. So what will be your market equity? 500 minus 300. 200 is going to be your answer. So this is how we need to solve this particular concepts. Okay? Remember, these are very important from the exam point of view in your module C. Now in exam they can ask any individual questions based on this. They can frame any case studies based on this. But this unit is not only this much, we have more important topics. So for that, you can join my upcoming batch. Okay, now if you want to join it, let me help you in that. You need to visit to our Adda 24/7 official page. First is a link is our official link. Now here, if you scroll this up, you can see here JAIIB CAIIB English Medium. Okay, so here your attempt is CAIIB December 25. Now here, this Officers Pro batch, this is our new batch, and if you join this particular batch, you will receive all 4 compulsory subjects, conceptual classes, updated classes, mock test, unit-wise test, along with that self-study books. All these things you will receive particularly in this batch. And remember one thing, if you want to clear in your first attempt, you need to start your preparation as soon as possible. See, in this particular sessions, we are discussing the important terms or some important topics. Yes, but for covering your all unit, all important topics, you require some paid batches. And these are your paid batches. Yes. Now, if you want to buy it now, you just click on buy now, and please don't pay 5,565 directly. Better to use one coupon code before purchasing it, and that coupon code is Y895. If you use this coupon code and click on apply, you can see now you require to pay only 5,060 rupees. That is the benefit when you are using the coupon codes. Now along with this, if you want to join my Telegram group, you can join it through the link which is available in your chat section. Please use that link and join my Telegram group for any discussions or related to your CAIIB discussion or JAIIB or any ABFM certification courses. So this is about today's Manthan series, and if you have any further queries or doubts, you can ask me through the comments also. So now with this, I am winding up this session. Thank you everyone for joining. Take care and bye-bye.